Hello, everybody, and welcome back to my daily market analysis show where I discuss stocks, commodities, and crypto. Today, we're going to be discussing the US CPI data that came in yesterday, Jerome Powell's speech today, and we're going to be covering Germany's collapse and the potential recession happening in Germany in the next few months and how that's going to impact the US market and maybe even the global market. Finally, I also will go into Bitcoin, and Bitcoin hit 93,000 yesterday. But is it due a correction? That's the main thing I want to cover here. And I'm thinking very soon there is a correction coming up in crypto, and then potentially we get that move to 120K. So let's go right into the analysis. I'm going to be sharing my screen very quickly here with you guys so that you can see what I'm looking at. And as you can see here, this is the S&P 500. We saw Amazon, Microsoft doing fairly well. We have a mixed bag here overall, and Nvidia and Google selling off. So overall, slightly down, but a very flat day on the S&P 500 yesterday. Now, if we go into the CPI data, what I wanted to discuss here with the CPI data is that we had everything come in line with forecasts. So there was a few worries about potentially there being issues with inflation coming in higher. And if you couple that with Trump's plans to deport and also add tariffs, the market is worried about inflation. I think the deportations and the adding of tariffs can be inflationary, but it obviously is for us to see in the next few months and for the next few years what impact those policies will have on the market. But overall, with the CPI data coming in and some earnings in smaller medium caps, we saw big pumps and big moves happening in the smaller cap sector. We saw stocks such as Honest Company, we saw RKLB, we saw QTBS, IonQ. These are three companies that I've already invested in. These moved really aggressively yesterday, 15, 20, 30% on the day. And overall, on the trend, probably around 80 to 100% in profit there for those smaller caps. That's just a few names to mention here. Of course, yesterday, I just want to give you a recap. I have been worried about valuations in the S&P 500. As you can see in this chart, I've discussed it 2 days in a row now, valuations. But I want to just mention it here again. Are around 22. So the PE ratio is around 22. The average in the last 25 years has been 16. And I think there are certain things that I've noticed recently, which is obviously we have Warren Buffett. I mentioned that yesterday. High in cash, around 28%, maybe even higher now, 30% in cash in terms of his overall assets under management. And then we had a discussion yesterday about the S&P 500 price versus earnings, okay? And then when we see a gap between these two, yes, the market can run a little bit longer, as it did here in 2020, 21. It can also get to a point where it becomes overextended and probably comes down and closer to earnings here. So either we need earnings to shoot up, maybe the AI bubble and a few other factors can cause this shoot up in earnings, or we get price to come back down in line with earnings as we did in 2020, 21. So one of the things I wanted to mention though is when we were discussing a previous chart and I was saying that valuations, so PE ratios are around 22 with large caps of the S&P 500, and then we're seeing the average in the last 25 years being around 16. When we look at small and medium caps here, the PE ratios are in line with what the average is in the last 25 years. So I've been discussing extensively how I'm expecting small and medium caps to catch up with the rest of the market, but maybe we get a scenario where we get the large caps catching up with the smaller caps. That would be a huge drop in the market. It's very unlikely, but it's a thought And something that I noticed yesterday when I looked at the valuations and I saw that they were in line with the average in the last 25 years. Let's see, we've deviated quite a lot from the average. So we might be due a correction, or we might see a spike in small caps and medium caps, and then an overall market drop to around the 16 level again. So that could be a run in 2025, 2026, and then we get a drop in 2026 in the overall market, which is probably more likely considering the impact of the election with Trump and a few other factors. Okay, so that's something that I thought I should cover here. And now I want to get into the S&P 500 chart. I've been mentioning a few times that we have a bit of resistance around here, around the 6,000 area, and it's been very flat for 3 days, and I expect it to come back down to about 5,800. That could be a nice buy the dip zone for most investors after the election, and I think everybody's anticipating that move higher here, especially analysts and Wall Street. So Goldman Sachs has a level of 6,300. The Fibonacci extension from this area here to here is is at 6,100, and then the overextension in the next 3 to 6 months or even a year could be all the way up to 6,700, maybe even 7,000. So that's something I'm watching out for. But the dip would be very nice, and I think it would be bought aggressively by investors at the moment, especially with everything happening in the macro, in the political sphere in the US, and also in the economy, with everything being fairly stable. Okay, so I've mentioned before that one of the best opportunities right now, and I'm going to reiterate that, is Russell 2000 stocks, the small caps. We've seen previously that after the election, we've seen a run of around 40% in the Russell 2000. I still think this is the best opportunity. So if you are looking for opportunities, I would look around small caps, and we've seen Arc Innovation, a few other small cap and riskier tech ETFs doing really well at the moment, with investors showing an appetite to get into those riskier investments that aren't making a profit. So those companies that aren't making a profit, and expect higher returns on those. That's my thesis at the moment, and that's what I'm playing out right now with my investments. Okay, now I wanted to go into, we've covered briefly the S&P 500. We're going to cover it again in a little bit more detail. I want to go into the German market. I want to go into the DAX index. As you can see here, head and shoulders pattern. We've seen a slight buy up today in the DAX, and potentially we see this buy up and we move higher, and then everything's resolved, or it's a retest and then we come back down to around the 18,250. And I think it's looking very likely that this is going to happen, especially with the German market on the verge of collapse. Here you can see that German swap spreads have collapsed, so 10-year yields are now higher than equivalent swap rates. That's showing clear signs that there is something wrong in the German economy. And then we're seeing as well the sovereign credit worthiness slide. Okay, so we've seen overall issues there in the German market. And a lot of analysts are comparing Germany to Italy, Spain, Portugal, and Greece of 2013. If you guys were around playing the markets during that period, you would know that around that time there was a lot of austerity and a lot of issues in those countries where they totally collapsed, and we could get a similar situation. The only difference now is Germany is the biggest economy in Europe, so that could be a very, very big impact on the global market. And in the US, what it's looking like is with the US, Germany and the EU is around 20% of exports. Okay, so it accounts for around 5% of GDP. So if we get a 30% in exports, or a 30% drop in exports in Germany, or even the European market overall, we could see a 1% drop in GDP in the US. So that could have a huge impact in the US market. So something to watch out for in the US, especially considering other economic issues in the US with jobless claims and so on being something to worry about in the next few months. Okay, so we also saw, and what I want to point out here is we also saw, so the reason why this is happening in Germany, just to give you a background here, is there is an issue with the political coalition. So in the EU, we get a coalition of parties that get together and then make a government. There's been an issue with the coalition that's currently in power in Germany, and that's led to these problems now in the economy. We've had similar problems in France during the election when we saw huge drops in the market, and we saw the CAC 40 index drop significantly. And I mentioned this in my Telegram group, which you guys are welcome to join via the link in my description of this video. What we saw there is a huge drop, a consolidation, another drop now. Okay, so we could be having two markets, the German and the French market, two of the biggest economies in Europe, with major issues economically and politically. So that's something to worry about, meaning that there could be problems in the EU zone overall. Okay, and this was an opportunity that I identified. And then when we're looking at the UK market, we're also seeing a slight dip there. And we're seeing it bought up again here, but I'm thinking around 7,800, 7,900 is a good level to buy again, with the RSI coming in below 30 or around 30 here for that buy up. But you never know. This has been very flat in the last few months since April and May, which is in line, I think, with most of the market except the large and the mega caps. So the Magnificent Eight that drove asset prices and the S&P 500 higher in the US market. Okay, so again, with the S&P 500, going to the technical analysis now, S&P 500, I expect a dip. It has to come soon. I just think, we have to find support around this area again. And we have to give opportunities to investors that didn't buy in prior to the election to buy in again and then get that huge run post-election. So we could be in line with my prediction on the video on the 11th of this month, where I discussed that on the 21st of November is potentially at the bottom in the market. Around the 20th of November is the bottom in the market, and then we see that move coming in higher post-election, where we see the bull run kick in. Okay, so we could get a dip, and then a bull run kicks in late November, and then well into 2025, and then 2026, and so on. Okay, what I'm looking at the moment, though, in terms of the markets, is I'm looking at the markets in the context of the cycles, the bull cycle. And at the moment, it's in line with the average, which is this darker blue line here. Sorry, darker grey line here. And I think we are probably in line with 1970s, 1960s. Okay, so that's something I'm watching carefully, and I am conscious of. And I think we're about 2/3 into that. So it's been since 2020 that we've seen this bull run. We've had that original dip there in 2021, 2022, and now we can get another maybe 2 years, so around 2026, before we get a market crash of some sort. Maybe during the middle part of Trump's administration, we can get that huge issue in the US economy. It could be driven by his policies, which could be inflationary for the market. Like I mentioned, deportations and tariffs could be inflationary for the market. We'll have to see. But this is something I'm watching out, and I am still very comfortable here taking positions that are long in the market. Okay. Now going into the other markets, I want to go into quickly. I want to go into analyzing the markets. I want to go into the Russell 2000. As I mentioned, slight dip here at the moment in the last few days, in line with the rest of the market. The VIX, really quickly, I want to cover here the VIX. The VIX has dropped, so we're due a spike here in the VIX very soon. The spike could lead to a drop in the S&P 500. Very nice correlation there between the two. So we know that the VIX will spike up to around 19, and then we're going to get the S&P 500 drop. Looking into other markets, I want to go into crypto. So that stock's done really quickly. I want to go into crypto. We have Bitcoin here. I'm still anticipating a drop in Bitcoin. And I think, especially after that blow the top off 93K, I think it just trapped more bull uh, traders into the market around that 93 level, 90. And I think now, if we can get the market to come back down to 80 or 82, 80, or even 70, 75, we trap in those bulls and then we get in another momentum play for that higher move to 120K. That's what I'm waiting for here. I am in a trade. I'm very comfortable here right now. Up around 28% on this trade, and I was up around 9% on the previous trades. Overall, on this move, I'm up around 40% since 13th of October. I expect the dip, and I'm happy for the dip to come in. We are seeing a bit of selling off here in altcoins. So Ethereum selling off a little bit against the move with Bitcoin, and we have Cardano selling off here as well. It was bought up a little bit again on CPI data coming in positively or in line with forecast. But again, I expect that dip to come in, and we're kind of seeing that overall dip coming into the market right now. I'm comfortable with that dip. I think it's necessary before the 21st of November, and then we'll get that huge move moving higher, and then potentially a bull run until 2026, ideally. Okay, that's the ideal scenario here. So that's something to be concerned about with Bitcoin. Okay, but these are the levels I already mentioned: 85 or 80. Okay, 85 to 77 or even 75. Okay, those are the levels that I'm looking at now. Going into other markets, I want to go into US oil. We're seeing a move up now. I've been watching this very carefully. We're seeing another nice bounce within the wedge. I want to break above this wedge for that trade to come in and then move higher to around 78. We could again get a dip below to around 65. That's optional, or an option, or a probability. However, I'm not too sure whether that will happen now, considering the price action here. I think we've probably found bottom 1, 2, 3, 4 times on these retests. It's been accumulated. I think it could go up higher here. Natural gas, nothing really to see here. Again, a couple of days of nothingness here. And then now I want to go into gold. Okay, let's go and discuss gold again. Gold had a bit of a dip, and I did mention to you guys 2-3 days in a row that I think gold will go down. It has, and it's continuing to go down here. As per my analysis, I think we can hit this level around 2,500, and then when we find support there, the RSI becomes oversold. We find support around that area. That'll be the next run for gold to go higher. Silver, very similar. I mentioned it yesterday. I even shared a reel on my Instagram and TikTok about this, just to make sure that other viewers would see the same information. I am looking for that buy up on this, but it's definitely short here, and I think we can find support on this trend line. Okay, so if we find this support around the 28 mark, and then we get a buy up in gold and silver. 10-year treasuries is something to look at, something to watch out in the markets. We would have thought that it would have dropped here, and we had a bit of a sell-off on CPI data, or prior to CPI data, and then now we're seeing it higher. Again, I do think that this needs to come down a little bit lower, okay? And I do also think that the dollar will eventually have to give up, because as we've seen here, the momentum is followed through, and my target now is 107. I mentioned this in the video yesterday and the two days before, that we could see 107 before we get any resistance here. Okay, that's something to watch out for. And then we can take some nice trades on the euro, going long on the euro and the Japanese yen and the pound, the British pound. So that's something that I'm watching out for carefully here for the reversal. More commodities. I mentioned cacao here. 2 days in a row I mentioned cacao, and is higher now. We are up, I think we should be up around 10%, 8%. And I think we can go as high as 50% on this trade. I personally didn't take this trade. I mentioned it in the previous 2 videos. I don't take every trade I analyze sometimes I don't like taking commodity trades. They're a bit more complicated from my end, and I don't want to diversify, I guess. I focus on stocks and I focus on crypto mainly, but I do analyze commodities because it's essential to analyze overall the market. Nickel is something that I looked at yesterday. I want to watch it again. Double, well, we get another bottom here. I want to see this find support here. If we can find support here, it's going to be very good for nickel on the long side. So we can find support, bounce around a little bit, and then go higher, and potentially, let's see, potentially we can make around 15% on this trade, on that retracement there. So the 50%, or the 0.5 Fibonacci retracement. Okay, so that's it for today. I don't want to go into too much more. Overall, the markets are looking strong. There might be a slight dip coming soon before the 21st of November, and then hopefully we get that buy up again, and then another bull run for another 2 years, maybe a year and a half. So if you guys enjoyed this content, I suggest and I want you guys to follow and subscribe. I'll be posting content every day on YouTube, Instagram, and TikTok. Go follow there. If you want to be part of my Telegram group where I share my analysis daily and I discuss ideas with other traders in that group, go and join the Telegram group. The link is in the description of this video. Until tomorrow, take care.